Hi everyone, Mary Beth Brush here with eXp Realty giving you your Monday mortgage market update. And of course, Nicole is with me, Nicole, with the Ruth team. Thank you so much, and Fairway Mortgage, for joining me. It's a pleasure to see you. I hope you're staying safe and everyone's safe there. So
thank you. Yeah. It's a pleasure to be here.
Yes. So, let's talk about the market. Let's just dive into the numbers real quick. As you can see, we have actually not lots of listings on the market. So for the active single family homes right now, Denver is actually at 715 single family homes on the market as of this morning. Lakewood, only 131 single family homes on the market. Littleton, you're standing at 205 single family homes on the market. Aurora, 423. Arvada, 165. And Westminster, only 80 single family homes on the market right now. So those are some pretty shocking numbers, I must say. It seems like there's just not a lot of inventory out there, right, Nicole?
Not at all. So Mary Beth, put that into perspective, because you were sharing with me how many homes we had on the market just a year ago.
I looked into, I can't get specific numbers on the actual date as of 4/20 of 19, how many homes were on the market. But in the month of April, in the city of Denver, there were 2,720 active units on the market in the month of April.
Compared to the 715 number.
Exactly, in the city of Denver. I mean, that's just mind-boggling to me. So what that translates to is the buyers that are still need to go out there and, maybe their lease is coming up, maybe their landlord wants to sell their property. You don't have a lot of options right now. So for the buyers getting out there, get pre-approved, get out there and look at those homes that are on the market and see if you can get into those homes. So, with that said, with these numbers of inventory being so low, how is the mortgage market doing? I know that in the past weeks it's been up, down, volatile here and there. So tell me what's going on this week.
Oh my gosh, this week, right? This week of the year. It is just crazy to me. So it's Monday morning. So what we came off of last week was really a shift of eligibility, right? And so what is the credit box? That was the biggest conversation. And the credit box is getting redefined primarily due to the fact that the director of FHFA has decided not to back up conventional loans. So he's not ensuring the fact that it'll be able to be serviced, right? Remember, really quickly, we originate a loan and then it goes to servicing and then it goes to the end investor on the market. And that servicing box is kind of like a property manager. They don't have their own funds. They're not a depository account. They're not a bank. They simply take the loans in, they service them. Every month you get a bill with their name on it. They collect your mortgage and they pay property taxes, mortgage insurance, homeowners insurance, and the investors. Well, by regulation, they are required by mandate to continue to pay all those things without receiving any money because of forbearance. Well, that's a whole, and we can go down the path of the forbearance conversation, but that box right there, the in and the out being uneven, and then they're not depository accounts, they don't have access to the feds, they're a service. Because they don't have the ability to continue to service those mortgages, it's stopping the whole train all the way up the pipeline.
Yikes.
So now lenders are creating a very tiny credit box to say, I'm only going to originate loans that fit into this credit box because I want loans that I know that I can hold on the line, because my servicers are far and few between right now taking loans that won't go into forbearance. That's the whole conversation. Who won't default? Who won't go into forbearance? They're looking at 20% down, lower debt to income ratios, higher credit scores, whole thing. And so banks across, Wells came out saying something, Chase came out saying something. I have a list of all the banks that have already started to do this. So when that all happens, that's the story right now is FHFA going to step in and back conventional loans, the servicing rights?
Right.
And how deep is that credit box, or I should say how little, deep is probably the wrong word. How little is that credit box going to get? Because it's affecting our first-time home buyers and all those brilliant millennials that are trying to get into the market. I mean, we had 8.8 to 9.2 million first-time home buyer millennials expected to enter into the market in 2020 and 2021. Life's still happening. They're still graduating. Kids are still graduating. People are still changing jobs. People are still moving. Life to some degree is still happening. Yet, as you mentioned, there's little to no inventory.
Right.
The pipeline of loans is troubled at best. And we're trying to get through the other side.
Definitely busy week for you, Nicole. So talking about forbearance, I know last time that we met, we talked about the difference between forgiveness and forbearance, but something that kind of came to mind to me are what I call the side effects of forbearance. For those, every day that goes on, people can't get back to work, they do have to go into forbearance if they can't pay their mortgage and maybe push it off for a few months. But what would happen if, let's say, somebody, is thinking about going into forbearance because they don't have a job right now, but maybe, their family is still growing. The kids are growing up and they might want to buy a home next year. So talk to me about kind of what could be the possible side effects if someone does choose to go into forbearance.
So we're starting to see the forbearance, the CARES Act went into effect starting April mortgage payment. So we're not actually seeing how that's going to impact credit scores yet or credit reports, right? All we know right now is it's going to be blank. So we actually reached out to a couple of servicers, and I have two examples of what those credit reports are going to look like. One is simply blank. It says that it's in forbearance and there's no payment history. A second one, a totally different bank, said that it was due to a worldwide epidemic. It literally said that on there, and it said forbearance, and it has little markings. So we're trying to figure out, every bank's slightly different, every servicer slightly different, how they're going to report, what they're going to report. But if you have this notation, the bottom line is down the road, lenders are going to see with clarity that you were in forbearance. Then the question is going to be did you need to, did you not need to? It's a question that I'm not 100% sure we'll have an answer for. But ultimately, they'll decide that might be a riskier borrower. Either they didn't need it and they took advantage of it, or they needed it and their job might not be as protected, right? So as a servicer down the road or a lender down the road, am I going to loan to those people that went into forbearance? That's the question. Right. We don't have all the answers because we've never been here before. Right. So what we're trying to do is estimate what it might be. But what I can tell you is while you're in forbearance, you are technically in default. So you can't do a refinance while you're in forbearance, and you can't buy another home while you're in forbearance. So you're going to have to catch that up. Yeah. The other side of that is, will they require a 12-month mortgage history before they'll allow you to buy another home? So if you're in forbearance for 3 months, 6 months, 12 months right now, are you going to have to wait a full year in order to refinance or buy something? That's the question that we don't necessarily have an answer to, but I'm leaning towards that's going to be the way it is.
Yeah, that's really tough, especially for the people that, like we said, can't get back to work and maybe can't pay their mortgage payments right now. Yeah. So the bottom line is, if you can pay your mortgage, pay it and pay it on time.
Yes. Yes.
So now we got rid of all the bad news. Let's talk about the silver lining. Like we talked about before, inventory is really low. So it's probably a really great time, even though inventory is low, but for buyers to still get out there if they can. So like we said, do those virtual showings, do those virtual open houses, and take advantage of the homes that are on the market right now.
Absolutely. There are some opportunities, and I don't want to sound cold, right? Because this is a very real thing, and people are very affected. And we're seeing estimated unemployments now hitting close to that 20%. So if that's the case, but we still have to take into consideration there are 80% still working. So 20% are unemployed, 80% are still getting a paycheck. They're working in some sort of job or career specialty industry that is still employed. So if that's the case, those people are still getting job transfers. They're still wanting to move up. Maybe they moved down and that was a bad decision. Or maybe they bought the perfect house, but it only has one office and they realize they need two. Or maybe the backyard's not nearly big enough that they thought was just fine. And they've been there for 6 weeks now, right? Yeah. So there's some considerations that are happening. And then there's also some possibilities of multi-generational homes, right? Taking care of the elderly, getting back to the roots of family. So as we reassess where we are today, people are already getting anxious to go looking at homes, right? So as they're going out there, what we're seeing is, yes, there's low inventory, and those numbers are staggering, by the way. Yes, there's low inventory, but there's also less buyers, but more serious buyers. We are seeing buyers go under contract immediately and without even seeing the home, because you can't right now until you go under contract. So we're seeing buyers still go in. We had a realtor that I was just talking to before this call that her house, it fell out due to COVID. The buyer lost his job and couldn't close. So they went back on the market this past weekend, had 4 offers on the home this weekend. But that same home, the original time she was telling me, had 15 offers on it.
Wow.
So when you put in perspective right now, you have a better chance of getting that home. So I would tell anybody, if you're in the market to buy it all this year, go ahead and get pre-approved, figure out what you can afford, what works for your budget, especially now that you probably realigned your budget a little bit, right? Like what's important, what's not important. And so now that you've got those clear numbers, getting back in and even watching what's coming up, because what's coming up might not have as many buyers attacking it at the same time. It's a really good opportunity for somebody to get in the market.
Absolutely. And the numbers that I showed you before on the blue screen for Denver having 715 single family homes active on the market as of this morning, that's active on the market as of this morning in the essence of a lot of those homes could be having negotiating offers going on it right now. So what I like to do is I always like to look at, pull the numbers on Monday morning and then pull the numbers on Tuesday morning and see the difference of how many went under contract in 24 hours. It's really staggering. Well, Nicole, thank you again so much. I know you were super busy, so thank you again for joining me, giving us all the lowdown and information on what we need to know for our Monday mortgage and market update. And so if you have any questions about your mortgage or maybe want to get pre-approved, like Nicole just said, give her a call, 303-214-6393. And if you have any real estate questions or want to do any virtual showings, give me a call, Mary Beth with eXp at 720-878-6236. Thanks, Nicole. We'll see you next time.
Pleasure. Bye-bye.
Bye-bye.